Morning, Friday the 16th of December. Market analysis, Stan Ehrlich. As usual, I start out with the stock market indexes, and I'll start out with the spider, the S&P 500. This week has been a very significant week. On Tuesday, the market attacked the highest highs for the last few months, and in some indexes made new highs. The S&P actually did make a new high by a very small amount. Let me get my little drawing pin here real quick, and I will outline. This is a half a point worth of new high. That's all, just a half a point. It didn't hold. The market immediately dropped back down, closing on the soft side, and well below the resistance, which was at 410, the exact high, which was on the 1st of December. So that resistance area remains a significant resistance area at 410. The lows we had seen since around November 11th, I believe, and let me get my cursor back. Correct. Excuse me, I have to move the, okay. 390.14 was the lowest low since the 11th of November. And that was only on an opening. Most of the other lows were around 392, 393. So when the market failed to hold its gains, its strength on Tuesday, it slipped a little bit more on Wednesday, and wham, we broke, excuse me, getting over a little cold. Sorry about the cough. We broke the lows between 390 and 393. Yesterday, on a closing basis as well, got there, stayed there. That's a downside breakout, a bearish breakout. This morning, we gapped down. The gap that we have this morning, I think, is still going to be closed. Gaps are almost always closed, but it's going to be because of the Santa Claus Rally. Remember, next Wednesday, Thursday, and Friday are the 3 business days just before Christmas, which is on a Sunday this year. You're supposed to buy, according to our research, 1/3 of your position in the morning on Wednesday, same thing on Thursday, same thing on Friday. We're basically averaging into a position 3, 2, 1 days before Christmas. Now, unfortunately, historically, there's no real money management to the Santa Claus Rally technique, similar to the October lows, which worked perfectly this year. The 13th of October was fabulous. But the Santa Claus Rally, you just hang on between Christmas and New Year's. And on the first business day of the new year, January, and the second and the third business days, you let go of in the late morning or a couple hours before the close, 1/3 of your long position on the first trading day of January, 1/3 on the second trading day of January, and your last third on the third trading day of January. Now, that basically is your Santa Claus Rally in significant detail. I have an idea. Why don't you use a very tight sell stop under the market on those 3 days for 1/3, 1/3, 1/3 offsetting your long positions, as opposed to just simply selling out? Now, the risk is the market would gap down the next day and you wouldn't get as good a price on your offset. You want the market to keep climbing, which it can and has and might do again, so that instead of just immediately letting go on the first 3 days of January, trading days of January, try to milk a little bit more out of the trade. Be a little creative. But basically, that's it. Buy just before Christmas and sell out at the beginning of the new year. Very simply, overly generically said, is the Santa Claus Rally. Now, where's it going to go back up to? And I think it's going to go down more first. Not just today. It's only got 2 hours to go, and it's down, 7 points or 8 points at the moment. I think it's going to go down maybe on Monday and Tuesday also. But early next week, I think it's going to start bottoming out because, look, we're down to 28 on the RSI on this custom relative strength index that we have at the bottom of the screen in the subgraph. It's not your standard Wells Wilder relative strength index. It's a customized one. And when it gets into the range that it's at now, especially a little lower, historically, we end up with buy signals. Here it happened around September 27th, bottomed out a couple of days later. Here it happened around September 6th, turned back up again for a few days. And frankly, I think this rally coming up in a week or two is going to be very similar to that one. This one lasted only 4 days. The next one is going to last, I think, a little bit longer, I hope. A week and a half. Just look at how often the market gets below the green line and what happens to the price action when that happens. When the RSI turns green, you end up with a low very often. The exact opposite at highs, the RSI is above the overbought condition level, and the market ends up frequently topping out, and often it's to the exact day. Let's look at this particular example over here. Yep, that was the exact high day. Now we got a ER sell signal, which is the red price bar, and ER buy signals are the green price bars. And this is a, open, high, low, closed vertical bar chart as opposed to a candlestick, but it's the same thing. And of course, on October 13th this year, we had a whopper of a bullish engulfing and oversold condition. And that's a typical buy signal for my strategy, which is 100% automated. There's nothing to do but load the strategy and watch it trade. Now, back to the current condition. We're very close to being oversold. We're about to get into the first week before Christmas, the last 3 days of which historically have been very profitable to trade. Last year, I think it was a $2,000 or $3,000 profit, just holding it, buying slightly before Christmas and letting go of the first 3 days of January. We will have on our website ER signals, the historical charts and data soon. Sorry, the website's not quite finished yet. Now, the rally will come back up and close the gap, I think. It might even come back up to 390, but somewhere between, and I don't really think that's strong, up to 390. I think it's more likely to get back up to the low of yesterday, and that would be the price of 87.90, let's call it 388, which is awful close to 390. So that's my expectation. When that happens, we could see the market start to move back down again. And I'm hoping that the correlation of the Santa Claus rally timing along with the gap closure will work out very nicely in our favor. Enough said. Now, the DIA, the Dow Jones daily data chart, is basically the same thing. We have a very, very small gap that we left behind between today's high and yesterday's low. We have a resistance area that we could challenge during the Santa Claus rally, if it happens, like I hope it will, and then lower. How low? Well, I don't think these markets indexes, the overall stock market in general, is going to bottom out until something along the lines of February. As a matter of fact, early February. I get some timing ideas involved. But the double bottom formation, including the low on October 13th, worked out spectacularly well for the DIA, much more of a bullish move than was forecasted, which was up to this level here. 322. So down we go. I talked about this at the beginning of the week. Listen to Monday, Tuesday's recording. See what I had to say before the fact. The QQQ is doing the same thing as the other indexes. New lows for about 5 weeks now, coming down. Now, in general, in the last year, or at least last few months, we've seen the Qs be the weakest of the three indexes. The strongest was the Dow Jones. It got the highest new highs for the most number of days, weeks, months on the rally, which topped out this Tuesday. The spider was kind of in the middle, and the least amount of strength was in the QQQs. But yesterday, I outlined this little broadening top formation. You have its first number one high on November 15th. Number two low is on November 29, and then we have January 1st be number three. Number four, which is the lowest low, is December 7th. And just this Tuesday, we had a higher high, 1213 is the date. That is three highs higher than each other and three lows lower than each other, creating a broadening pattern, broadening top. They're fairly rare. You don't see them very often at all. I don't remember the last one I saw. It must have been maybe a few years ago. But this one is working great. How bearish is it? I don't know of a way to forecast a downside objective, but I kind of expect that you measure the widest part of the formation. So just eyeballing this in general, I'm looking at the low 260s. So for the QQQ, I'm thinking of another 10 points more than the current quote we have right now, which of course is a new low since for about the last 5 weeks. Now you also notice that today's low closes a small old gap. That's important. We could be looking at a low now, today, right this hour, and I wouldn't be surprised because of the gap closure concepts. But we're coming down pretty quickly right now on the QQQ 1 minute chart on the upper far right, dropping like a rock. And the DIA is holding up a little better, not quite as close to its lows. And the spider's kind of in the middle and dropping fairly quickly. So I wouldn't mind it making lower lows before the close on a Friday, before this last regular weekend. Next weekend is the Christmas weekend. Remember, Christmas is on Sunday next weekend. All right, let's go look at futures. I normally start out with, and that is a mistake, normally start out with the wheat market, which I am going to do so. Oh, they're out of order. So I'm going to start out with heating oil. Now, the red bars, again, are the sell signals, the ER automated trading system, ER signals, automated trading system. And the green bars are buy signals, ER, that's Ehrlich reversal, signals, a trading system, which is available on TradeStation. It'll soon be available on NinjaTrader. Now, here we don't have any signals recently, and I'm going to concentrate on the last couple of weeks worth of price action on these charts. So you can see the yellow and the red and green. Yellow means you're either oversold if it's on a down move, warning you that the market is likely to turn back up again some amount, or yellow on a rally means you're overbought and it's likely to turn back down some amount very quickly. The next couple of days, or that day may be the turning point. So it's a little ambiguous, and that's why I'm just cautioning people with the yellow bars. But the specific signals, red and green, as you can see, are frequently on the high for weeks, if not many months prior and after. This system is built to pick the high or low day, period. And these charts will prove it to you. So heating oil, nothing at the moment. I'm a little bit bearish. Next chart is soybean meal. We got overbought. I said so at the time. The market dropped down, not quite so overbought now, but the trend is up, and we had a major upside breakout just a couple of weeks ago. So I'm looking for higher prices on the soybean meal. Next, natural gas, the opposite. It got oversold, rallied into resistance, and I'm looking for modestly lower levels in the near future, very near future. Next, high grade copper, HG, and fairly neutral here. You're in a long-term sideways trading range since essentially July. A little bit higher highs recently and a little bit higher lows also gives you a slight uptrend. Next chart, platinum. We got overbought twice recently, and we're forming a pennant formation. Pennant formations, of which we're at the bottom of right now. So this could be a buy at 99.30-ish. Pennant formations are usually a perpetuation formation. If it's in an uptrend before they form, usually you're going to break out to the upside. And that could be next week. Looks pretty reasonable to me. So if you buy here, I think maybe your risk is fairly low because you don't want to hold it if it starts to make lower lows or breaks out of the pennant. And if it does start to pop up in the pennant, you might even consider adding if it breaks out to the upside. So this looks like a low risk, almost oversold place to be nibbling at the long side of platinum. Next, sideways for about a week in the bond futures. As you know, the Fed implies that it's going to slow down a little bit with its interest rate hikes and not be quite as aggressive as it incredibly was this year. Lots of records were broken in various ways, and they seem to be starting very early, starting to work. Rate of inflation may be slowing down, quote unquote. This chart looks to me like we're going to see it drop back down. We're in resistance. We've met the upside objectives, and we did get overbought a few times on the way up. And although the signal itself didn't work a week ago, the red bar, I still think that we have a top building in the bond futures contract, 30-year long bond, US is symbol. TY, 10-year notes, same story, no changes. A couple of trades that the system did on this particular chart, which I think covers the last, looks like about a year and a half. Next, we have wheat. We did get a sell signal on the top of the market in wheat. It was the day that the wheat market started to break down after screaming higher because of the war. And incredible, great short sale at the time. We had another great bear signal, but nothing since early this year. So I'm bearish on wheat. The trend is down. Next chart, live hogs. We got very close to oversold, not quite. That was enough in this case for it to pop back up again today sharply. I don't think we're going to be going up too much more. Live hogs are in a big sideways trading range, might get back up to about 90. That's about it. Next. The E-mini is a futures contract, the ES. It's also a stock market index, so it's going to pretty much mimic the SPY, the spider. So on October 13th, we had a fantastic buy signal. Ladies and gentlemen, I talked about October being the October lows back in August and September. I told you what to look for, how to take advantage of it, et cetera, and it worked this year for a 2-month period. Great. But Tuesday of this week was the end of it. That's when it made a new high and couldn't hold it and dropped all the way back down almost to the low of the day, if not, reversing completely. It closed a little higher. So the E-mini Same commentary as the SPY. Next, sugar got overbought, said so yesterday. We did slip a little on the opening and make a minor new low, but we're slightly higher momentarily. I think we're probably going to slip a little bit more. I'm saying 1950, 1925. We'll see in the next few days. We're currently 2009. Next, cocoa. Long-term bear trend was broken in early November on a big rally, got overbought, had a sell signal that was great for a week. Now in a sideways trading range, the trend is up, but we have a minor new low for the last couple of weeks. I think the market's about to turn back up again very soon. I'm neutral to slightly friendly on cocoa. Next, coffee. Buy signal on the bottom. Turned out to be the first low of a double bottom. The second low was also a bullish engulfing key reversal. The old phrase is key reversal. We didn't call it bullish engulfing until candlesticks started to become popular in the mid 80s. I started in this business in 1971. We have an outside down day today. It would have been red, except we weren't quite high enough on the RSI scale in order to turn the price action red. But it's a bearish engulfing. It's normally a bearish, standard bearish signal. I'm expecting coffee to drop back down probably to 53, 54, something like that. 153, 154. Next, OJ. Not too much to say, except I do like my orange juice in the morning. Next, live cattle. Same thing. Sideways trading range, trying to make new highs for a very long period of time, having a lot of trouble, but the trend is up, and I would not be surprised to see cattle move up to the high 150s, maybe even above 160. Next chart. Soybeans. Uptrend, stair-stepping its way up, probably starting the next rally to minor new highs today. I'm friendly, nothing roaringly bullish, but probably up to 25 to 26 soon, very soon, 1 to 2 weeks before the end of the year. Next, corn. A somewhat obvious situation, but we did get a good buy signal smack on the bottom there, that green, just a few days ago. There's a lot of resistance up above, so at around 672 or 3, it's going to have some troubles, if not even a little bit lower than that. The trend is mildly down lately, last couple of months. So I have to look for a new short signal or a place to go short in the next few days. So I'm mildly bearish on corn. Next, bean oil. We got a great buy signal on the bottom last week. That's actually Monday of this week. And it has rallied some, not a lot. So I'm friendly, probably looking for 68, 69 on the soybean oil. Next, crude oil. The long-term trend is now down. We've seen new lows for many, many months since February, March. We had a great group of 3 sell signals, one of which was the high exactly day. That's what the system is built to do. It doesn't always pick those days, but it does frequently. And I'm looking for lower levels, probably down into the 65, 60 area. Next, gold. Looks like it's trying to top out. Can't be too sure here. Fairly neutral. We had a sell signal that did not work a couple of weeks ago. Next, neutral, flat, nothing to say. Soybeans, and we've got those commodities covered. Great. Let me look at forex for a moment. This would also essentially mimic the futures contracts for the currencies as well. We have a euro dollar bearish engulfing yesterday. I pointed it out, talked about the specific signal that could start another bear move on the euro. I think it's going to get back to par again, 1.00000000. We're at 106 essentially, and we were a little bit above 107 at the high of yesterday. So we're slipping, no surprise. I think we're going to drop down more. We reached an area of resistance, bearish on the euro. And if I'm bearish on the euro, I got to be bullish on the US dollar, which did have a bullish engulfing yesterday. Plain and simple, looking for higher levels on the dollar index. They're pretty much mirror reverse images of each other. The dollar yen, nothing new here. It's a little sideways trading range, but I'm expecting new lows soon. The Australian dollar to the US dollar, same commentary. Dollar to the Canadian dollar. We picked the top of the market, and we had a buy signal close to the bottom, very close to the bottom. I'm modestly bullish, but we're already up quite a bit, close to being overbought, not quite yet, and in an area of resistance. So it's a little risky to be buying at this particular point, if you ask me. Looking at the dollar to the Swiss franc, it's a little risky to be going short. We're oversold. We're getting a rally the last couple of days. I think it's going to rally a little bit more up to 0.94 area, maybe 95 at best, and turn back down again. Euro to the pound, got overbought today and currently trading lower than the previous close after getting up into overbought territory. I think it's in the process of reversing. I'm looking for a bit of a dip here down to 86, 85 area for the euro to the British pound. And lastly, a little comments about sector indexes. XLP broke down, looking for lower levels, gaps to close. IYE, head and shoulder top formation is working just fine. I talked to you about this weeks ago before it broke out to the downside. And today's a new low for the trend down. You can see my little vertical blue line. My minimum downside objective is approximately 42.90. So I'm a little bit more bearish. Next would be SMH. Breaking out to the downside today, just starting a down move. XLK, essentially the exact same comment and a broadening top formation as well. Highest high for the rally, then you have a lower low, then you have a higher high, then even another lower low, and finally on Tuesday the highest high, and then boom. This looks like it's going to drop down to 117, 116, 115. Next, XLY. This is going to make new lows to the whole trend very soon, except you're oversold today and yesterday. So there was support that we're reaching, may hold it for the moment. A rally up to approximately 138 area, 39, 30, high 37s first. And then boom, into the 120s. Next, XLF. It left a gap behind. Now we're oversold today. We're probably going to rally up to 134.50-ish. That I meant 34.50-ish. In order to close the gap from Wednesday to Thursday, the gap down yesterday, and then continue to trend lower after that. But it looks like we're about to turn back up to close that gap. XLI is the next broadening, well, not quite a broadening formation. Didn't quite make it like the others did. But we have a breakaway gap to the downside from Wednesday to Thursday. We have a new low for a significant number of weeks, and it looks like it's trending down toward, I would expect at least 93, maybe even below 92. Looks pretty bearish. XOP, I'm looking for new lows. This did get oversold, okay? rallied for a couple of days, not a surprise. Turned around and starting now to trend lower again. There's an old gap to close, which has not been closed yet. So I'm looking for 127 and lower probably next week. GDX. Looking for modestly lower levels in the near term. Can't come up with anything great to say about this. Maybe the trend has turned up over a longer period of time, but the next week or two, I think we're going to see it decline somewhat. OIH, pretty much the same kind of comment here. That's a nice one. We got the exact high day here for months before and since on November 14th, a month ago. We picked the system, turned the price action red, and gave you a sell signal on the high day. That's what we all like to find. XLB, lower levels on a short-term basis. XLV is in Victor. Same comment there. And the last one is XLE, also looking for a little bit lower levels here as well. These are all sector symbols. Remember that there's obviously a group of stocks that are behind this chart that are all in the same industry, like pharmaceutical stocks, individual pharmaceutical companies for the pharmaceutical industry, sector industry, or the gold mining industry contains stocks that are gold mining companies, etc. So today, Friday, I'll be back on Monday, and I'll be making my recording for the first few days of next week, but then I'm going to be on a vacation for a week, Christmas with the family. Talk to you soon. Have a great weekend. Stan Ehrlich. Bye-bye.